All right, good morning, everybody. So we made it through the 10-year and the market is still waiting. We just made it through the European Central Bank rate decision, and now looks like we're waiting on Governor Bailey, but he's not expected to really shake anything worse than a hurry up and wait scenario, right? So he's going to try not to rock the boat. But it's the 30-year today that I'm really focused on. It seemed like we should have had the 20-year somewhere. I was looking around yesterday for it, and I didn't see it. But we got the 10-year yesterday. We got the 30-year on deck today, and I really think that the 30-year has the capacity to finally get us out of this channel, this rut that we're in. Just hurry up and wait mode. So I want to keep our eye on that call wall today and see if it's going to get rolled up, because it still has not. According to Spot Gamma, it's still in the same spot. So taking a look at what's going on around the world, small caps are down the most, near 0.5%. US tech, which is NASDAQ, down 0.25%. Dow right behind that, less than a quarter. And the S&P not quite at a quarter, but not back to zero. Japan basically flat. Hong Kong up a quarter. And the UK up a quarter. It's just a market waiting on something. It's been a pretty boring week, all told, on this hurry up and wait kind of scenario. You can see the threat level here with Bank of England, and yet really in the end, it didn't come to anything. We're going to get a little bit of jobs data this morning. Nat gas, which has been, it's really been trying to come up off of those lows. We're going to get our own Fed speakers throughout the day today, and that 30-year, which this suggests is not important or does not have the potential to be impactful. I disagree with that completely. And then we're going to get a lot of data out of Japan tonight. Now that has the capacity to really shake things up too. They try to do a really good job over there of not rocking the boat. That doesn't mean they can't or that they won't. And then tomorrow, of course, we still have a massive lineup of Fed speakers. But really, I think the 30-year today has more weight, possible weight attached to it than anything else. The volume's a little light this morning, and I was looking around trying to identify if there were, any markets closed for holiday or anything like that, and really nothing stood out. It's just a market waiting, and they're not even hedging with this wait. They're just waiting. So we can see the volume here is at 54. That's a little light. It makes sense that it's light if everybody was sitting back waiting for the data coming out of Europe. It's just interesting to see that there wasn't any real hedging attached to it, likely because European central bankers do a much better job of telegraphing and communicating compared to US Fed speakers. So they probably already had got the message out loud and clear that they weren't going to change anything and that there wouldn't be any surprises. So really no reason to hedge. And thus the volumes were light as people waited, and yet there wasn't any hedging because there really wasn't much concern of surprise. Still waiting on the Spot Gamma's founders notes for the morning edition, but the call wall has still not moved. We rested off of volatility early this morning, and we're still hovering around that 5,200 level. Make no mistake about it, even though the 10-year yesterday didn't provide any real volatility, the 30-year can. It has, and it could again today. So, don't be complacent on that 30-year bond. The daily channel's a little wider today. If we consider historically what that would mean, we would have an expectation more that we would range today than actually make big moves on the day. Now, really, that's just one small data point on its own, right? We can look at that channel and say, well, it's wider. We shouldn't make, big sweeping moves today. But data overrides any of that. So hold the line into the 30-year auction, and then we'll see what we get on the other side of it. Plus, whenever you have Fed speakers talking, one, they can just misspeak, say the wrong thing, and move markets. Two, reporters can misinterpret what they said, read into it something that they didn't mean, and move markets unexpectedly. And then three, they can just straight up be wrong and say something that isn't true and move the markets. It's happened before and it'll happen again. So don't be complacent on these sideways days where we have a bunch of Fed speakers, because it doesn't take very much. The algos will trigger long with, faster than any human's going to trigger. And if one of these Fed speakers says the wrong thing, we can move up and down, 20 points in the blink of an eye on the ES, no problem. From a pure price analysis standpoint, when we come out to the weekly, we still have no answers yet. We've got our low that we've talked about, but we don't yet have our lower high because we have not yet pulled back enough to consider this a pivot. And until that pullback happens and we can point to this and be able to say we've got a lower high, we don't have one, which means at this point, all we have is a really beautiful trend that started in November with QRA, ran all the way up into April, and we pulled back, and that's it. It's just a pullback in a really strong, beautiful trend until we set this lower high, if we're going to set a lower high at all. So far, we haven't. Now, there's a ton of examples that you can go back in the past and see where we had set a high and pulled back into structure, rose up out of it. That candle of control held, and so we weren't able to get through, and down we went. We're right there. I mean, this is an inflection point, very similar to this back here. If we break through it, then we'll come back up to the top and we'll challenge that level and see if we can get through it. But that's if we can get through it. So otherwise, if we don't get through it, we're very likely going to come back down and retest that low, which happens to be a major level. It's 5,000. There's no guarantee that it'll be just like last time, that we would cut back down and break through it and continue to go to the downside. But that has to be taken into consideration. So for all those people that keep asking, what do you think? Are we going to go to the top? We're going to go to the bottom? I mean, I can guess as much as you can, or let me say it another way. Your guess is as good as mine, because we don't have anything, if we're just looking at these candles, you've got to take it farther and you have to look outside this chart. What's going on with, treasury and yields, FX markets, Japan, what's moving the dollar, because those things are going to be the things that move this market. These candles alone just aren't going to give us that answer. On the week, early on in the week, we were pretty far away from that weekly pivot point. I know this is a really cluttered chart, but the weekly pivot point is all the way down here at 51.21. And at one point this week, we were a pretty fair distance away from that. And now we've pulled back on the week. When we do that, I found that a lot of times that sets the high for the week. It's not impossible to get through there, but it would take a significant amount of shock and awe to get us through there. So we would need a really good data source, a real good kick in the seat to move price through that level at this point. So it's possible. Other than the 30-year, I don't see anything on the docket this week that can do that. So that's something to think about as well. I mean, at the very least, it'd give you maybe a position into Friday afternoon, like a call credit spread above that level, a day and a half worth of decay. Any consideration for a downside move? We still have the volatility trigger. We have yesterday's RTH low and then yesterday's entire low, 0 gamma, and then the ADR level down here at 51.75, which is just above the 3-week moving average. Even the fact that we're above the 3-week moving average is bullish. And the fact that we're above the weekly pivot point is bullish. We're also inside week breakout, which is also bullish. All right, we really don't have a classic shape here, and there's no expectation that the point of control is going to move anytime soon. We're building up a nice level of volume at our current location, but the point of control is getting volume from Friday, Monday, and Tuesday, that zone right there. So we're not going to lose those candles until tomorrow and into Monday and Tuesday, which means we won't lose this volume structure here. And that means we won't move that point of control from the volume dropping off. We can only move that volume point of control if we happen to stay here and continue to build up this volume and see it moved. There's a difference, right? There's a difference between price staying in one spot, building up enough volume that the point of control moves, versus just having some volume built and losing it as time goes by and seeing this price shelf, volume shelf break away and the profile just happening to move because of it. It's two different things. We've got a relatively wide profile, about 200 points, and that isn't going to change anytime soon either, at least when it comes to getting smaller. It can always get bigger. All we need is price to break out and continue to move higher and or revisit the lows and expand lower. But a lot of times we can look at the profile and anticipate that constriction from the idea that we will see it lose price that's holding a high or holding a low. But even when we lose this low here, we're only going to reduce things by about 20 points. We can just pull it over and see how little that helped us once we lose that. Now, if we were to stay here without breaking out, then of course the profile would get smaller and smaller, but we're looking for really at no change here unless we finally begin to expand and get out of this. But it's already a 200-point range. And really, we've got nothing on the 5x5 either. No VPOC from yesterday. No wide profile to focus on, no weak lows. This is generally how it turns out when we go sideways enough that we're just overlapping everything. All right, we're still holding above the 10-day. Everything is fine. We're gently working our way back towards that. We're getting closer and closer to it just by sitting still and letting that 10 come up to us. We call that correction in time rather than correction in through price. We're more than 1.25% above the 10-week. We're continuing to expand farther away from it. If we look at what we have been doing on the year, we spent most of the year above the 2% by the 10-week by at least 2%. So we're just getting back into position again. The weekly expected move so far has been relatively accurate, but it's not hard to stay in the box when we're in a hurry up and wait mode and the market is sitting on its hands waiting on data. Because we're so close to the top of this, if the 30-year today is a positive move on the market, I would add another standard deviation to the upside for an expected move measurement. Otherwise, if the market doesn't like it, then getting to the bottom of the weekly expected move, even by the end of the day, wouldn't be that hard. But definitely by the end of the day on Friday, by the end of the week. It's only 100 points, right? Down to 5,100. So we can do that, no problem. All right, Bitcoin is down the most. Nat gas behind that. And I mean, bonds are trying. They're moving to the downside. They're not down enough to meet our qualifications. They need to be down 0.5%. They're just not down there enough. Even with Bitcoin being down more than 1.5% today, it's still up over the last 5 days, more than 6.5%. Same thing with nat gas. It's down 1% this morning, but over the last 5 days, it's still up more than 7%. So those things, they need a little bit of a pullback. You know, it's not much of a surprise to see that we're getting that. You see TQQQ, it's still up almost 9.25. So yeah, they're down a little, but you know, the Mag 7 still up more than 4.5% over a 5-day period, even if it's down a little this morning. Looking at things that are up, what's that? China ADRs through the K-Web. So BABA, Baidu, JD, EDD. Those are up this morning. The VIX is up, interestingly enough. More China stuff through MCHI. gold miners, real estate, but really we're getting into levels that don't quite meet those qualifications again, right? We need them at least 0.5%. So gold miners, and China and VIX. It's not a surprise that VIX is up, right? With it being as low as it was yesterday, and the VVIX being down there at historic lows. There's an old market phrase about volatility, and on the face of it, it's easy to disagree with, but I mean, really in the long run, it makes sense. When the volatility is low, it has nowhere to go but up. We know that that's not true. It can just stay low, but at some point it's going to go back up. So that's where that phrase comes in. If volatility is high, it has nowhere to go but down. Again, we know that's not true. If it's up, it can just go up higher, but eventually volatility that's high, it will come down. So, when we were looking at that volatility yesterday, looking at it, it was really low. The VVIX was low. The same phrase applies. Wow, it's really low. It's got nowhere to go but up. It's not a surprise that it's up a little bit this morning. But this is a market on pause. We're waiting for something here. This hurry up and wait scenario generally fits into, selling into strength, buying into weakness, playing reversals, and holding the levels while we wait on data. That's what we're stuck waiting on this morning. So 1 o'clock, we're going to get the 30-year, and we got some Fed speakers. All right, so precious metals, gold and gold miners are up because we got silver and uranium also showing up this morning, and crude is up this morning. So at least we have more participants than just the China ADRs, right? There's a lot of different ways to play gold or silver. And we can see pot stocks are trying to move around a little bit. So as we get closer to the open, for those of you who want to day trade who aren't trading in the futures, at least you'll have more choices than just one sector to play in. Yeah, BABA inside day breakout. Just be careful. This is a beaten down chart. It's got a lot of work to do for it to work its way back up. We keep saying if 80, then 100, but it got into 80 twice and it just came right back down again, took the beat down. Still, we're working on it. Inside day breakout. It gapped down, held the line yesterday. Well, the 7th, gapped down again and started to turn things around. And now we're gapped up this morning. So we'll see. It's the start. The thing is, that really kind of looks like a halfback test, right? If we were to mark that low and mark that high and try to find the midpoint, it looks like, it tried to find stability on the midpoint, which if that's the case, that's great. We're above the mid, it has to keep it. The concern is that this is just a bit of a pullback before continuing on to the downside. And see, that's why we use the drawing levels, I suppose. See if it rebalances. There we go. It's just a little slow this morning. All right, so from this bigger move, we're through the halfback. But if we're to focus on this smaller move, this newest leg down. Then we've got a resistance level 79.86. We got to get through that. Once we do, got all that selling in that wick there. Working our way back towards 82. Level by level. Yeah, it does look a little bit like an inverse head and shoulders. You're not wrong. Just, from my point of view, head and shoulders belong on the right side. They belong where they're supposed to be. And the textbooks will tell you that they can be continuation candles, but I never play them that way. So an inverse head and shoulders to me is supposed to be at the lows. It's not supposed to be at the highs. I don't use it as continuation. So when it is in a location that it shouldn't be in, I dismiss it and I don't use it. No, it's not that I don't use it anyways. That head and shoulders aren't a tradable play to me. I'll mark them and spot them and look at them, but I don't trade them. They're the butt of all the jokes, right? There's always the losers in the group. Head and shoulders patterns are the losers in the group. Typically, you'll see traders who can't find any other excuse for taking the trade that they took to point out a head and shoulders and say, but it had a head and shoulders. Yeah, and it still didn't work. That is a really clean break on silver after ranging. So we had this nice base, gapped up, based for a few more days. Now we're gapped up again, right into this resistance level. It's an area of concern. If we can get through that level, then we'll work on this channel gap up here that needs to be resolved at some point. We closed way up there and opened way down here. This gap is unresolved. It needs fixed. It is a serious resistance that we got to get through at some point. Got to say too, that pullback was more than I would like, right? When you're looking at a consistent move in the market, nice pullback. That pullback was way too deep. So we could mark that high and that low and kick the 50% mark, and it'd probably make a great short when it gets into that half back rejection. Also, nice clean move in crude. It's been working on a flat top with these lower lows, and then it turned everything around yesterday. We'll see if it can stick. This is crude CL. Let's not use CL. Let's go to US oil. So we're on a daily chart, US oil. We're underneath that 200, or we were trying to work our way back up above that this morning, fighting with 80. But you can see we're under the 10, the 20, the 50. We barely today got back above the 200. If this is the turnaround, kid, and we're going to try to run ourselves back up, there's a lot of work to do here. And I'm still going to argue that we're not doing that anyways, that this is just a leg up before the continuation to the downside. We can see the nice clean price that we've been running here, right? That's exactly what we're expecting, because that's just what markets do. So I would temper any expectations of a nice clean rally back up, and instead I'd focus on this particular candle right here. This is May 1. So your door strategy comes into play. Day 1 open range. If you don't like the day 1, you can use the 3-day. Either way, it puts us in the box. A 3-day has the center point right where we're at. This May 1 candle has the center point right above $80. So between those halfback levels, the 50, the 10, the 20, there's 105,000 different reasons why it shouldn't continue to go up, just like it didn't continue to go up back here, right? Made the move, got into the halfback of that really big candle, couldn't make it through, tangled through the moving averages, down we went, broke lows. We're looking to make the same move now, get tangled in the halfback, maybe some moving averages, break lows, continue the move to the downside. So a couple ways to play this. LRE says taking your short while it's still going up, especially if you're an options trader. Getting puts while the market is still moving higher is the best thing that you could do from a risk, from a dollar risk point of view. Some traders can't stand to lose and will go out of their way, extraordinary things to try to avoid a loss. And of course, eventually they lose anyways, and it's usually a drastic, horrible loss just because of all the extra measures that they tried to do to avoid the loss in the first place. There's an old phrase that says you pay for confirmation. Oh boy, that's true. So you could wait for the rejection and wait for it to turn and wait for it to fall enough and have everything confirmed that it's actually finally truly going down, and you'll pay for it. You'll need a wider stop. Everything changes because of that. If you go short before anybody else thinks about going short, especially if you're an options trader, you're going to get really great prices on those puts. And if you're wrong and we continue to go up, those puts won't lose very much value because they hadn't yet already started to get plumped up. So if you're not afraid of loss, the loss will be small. You get a minor hand slap and you move on, no problem. I'm in the camp that says, I don't care. I've lost before, I'll lose again. A small loss is nothing. Slap my hand, I'll move on. It's not about right or wrong. It's just what kind of trader you are and what you can stomach. So if you don't want to wait for confirmation, then this is called an LRE, low risk entry, shorting off of that midpoint before there is even a signal to take a short. You'll know if the short is wrong if we close above either one of those two yellow lines, but I'd say the top yellow line, it shouldn't have closed up there. If you want to give it a little more room than $81, because that's where the 50 period is at, it shouldn't close above that. It shouldn't even get there technically, but certainly shouldn't close above that. This is a daily, so on the day, it shouldn't close above it. If you want to put that on a weekly, you can just pick this last big candle. This is last week's candle, and use the midpoint, $81. On the week, it should not close above the 10-week moving average, which happens to also be the halfback of last week, because confluence, things just line up that way. Keep it under the 10 if you're going to take that short. And technically, we could run up into the 10 before we get the short started. So there's no reason to jump on the short today, per se. But I do like this for a short. I think we're not done moving to the downside. I worked in the oil and gas industry most of my life, and that does not give me any insight into how oil moves. So for those of you who know me and know I've worked on the rigs, I was playing in the mud, slinging a hammer and, tripping pipe every day. That gives me no insight into what oil it does. The reason we're even taking the time to look at gold and crude and all of this is because equities are on pause. We're waiting, all right? We need something to shift things, but there's always something to play. We could play oil, gold, something, rather than just sitting there staring at names that aren't moving, right? And I only looked at the sectors this morning. I didn't look at individual names. obviously we can always find a name running. Gold is wedging. It's getting tighter and tighter. We're not yet in what they would call a squeeze, but it is compressing tightly. And it's got a history of making really decent moves after it comes out of these. So it's a little bit of a coin toss on which direction the move is going to go. We can say we've got lower highs and lower lows, so it is drifting to the downside, but there's a lot of reasons to believe that how it got to where it is on this chart, all the big move, that it's not done yet. And if that's the case, we're looking for a TRB. The small TRB would put us back up to 23.5, 23.50. The full move would take us back to 24 and then into blue skies above, or at least new highs on the year. So I'm sure if I go out far enough, there's higher levels somewhere, right? No. Blue skies. So what we would eventually form is a cup. Whether or not we get a handle is kind of immaterial. It's irrelevant because we would still be looking for that move higher. Just like back here, where we actually, I guess you could say we had a little bit of a cup, but the handle went way deeper than we would ever want to call a handle. So we just look at the bigger move. So what we're doing here is looking at the S&P 500 because TradingView doesn't give us a chance to look at the S&P 100. We have the NASDAQ 100, but we don't have an S&P 100. So we just use the S&P 500, but then we change the weights so that we're looking at the biggest names. It's not perfect. You can say I got 112 here instead of 100. But if I try to adjust this, it drops down to 92. And I'd rather have 112 than 92. So we're overshooting it. It's not exactly the S&P 100, but it's close enough. Now we got to adjust the weights. So we come over here and adjust it to at least 0.5%. But if you want to, you could turn it all the way down. Now we can see at a glance what's up and what's down this morning. And I got to say, when I started and I seen a heat map, when I first started trading, I thought this is the stupidest thing. What a waste of time and space and resource. Why would you even bother? Well, I was ignorant, right? I didn't see the value of this thing. At a glance through the day, you can see the tide and the turn of the market. What's going on out there? There's different companies that make different ones, like over on FinViz. You can do this for volume instead of just price. You can set it for percentages, change indexes. You can put your own watch list in there, right? It doesn't have to be an index. These things are super helpful, very valuable. If you never use these and you're instead using watch list with columns and you're sitting there squinting at those things all day long, I'm at my desk 12 to 15 hours a day, and you get tired of squinting at those tiny little watch list columns. These things are really helpful, really useful. The size of the box gives you the market cap on this one because that's how I have it set, market cap. But you can change the size to mean different things too. So the size of the box, the color of the box, the shading in the color of the box, all of that can be adjusted. So we can see the Mag 7 very easily just by recognizing where the big boxes are. Google, Meta, Microsoft, Apple, NVIDIA, Broadcom, all at a glance. right? Amazon way over there on the side. So we can see like what's going on this morning. Things are down more than up. The Mag 7 is a little squishy, not really more than 0.5%, but they're a little soft. Even Tesla's down. Restaurants, have been kind of lit up lately. Certainly not McDonald's. They're down. Coke and Pepsi basically flat. Same with Nike. Really nothing in that. We got to hurry up and wait market. A little bit of crude or energy. Chevron, Exxon, ConocoPhillips, even tying that back with GE. We really don't have much in the chip sector either. A little bit of communications with Netflix. Wouldn't be surprised to see maybe something with streaming, but it's not, right? If we got Netflix here, we go look at Disney. Disney's not doing good. Comcast isn't doing any good. So it's just Netflix on its own. Costco continues to just still be awesome. Some communications, AT&T, Verizon, T-Mobile, nothing. We got to market, hurry up and wait. So what we'd want to do if you were doing this, say in another hour from now, because closer you get to 9:30, the more opportunity there is for these things to move. You would want to tie this back into the sectors. Which sectors are up, which sectors are down. So we've got the K-Web. I had this set on the S&P 500, really, but adapted for the 100, right? Because we adjusted it. But you can change this over to where you would see things like Baba, Baidu, give that the adjustment, see things that are up, things that are down, find those China ADRs like PDD there. They'll start to stand out, but get closer to the open. Otherwise, we're all waiting on the 30-year. Now, on any given day, when we're closer to the lower edge at this time of the morning, I'm looking at the lower edge saying we're probably going to go there first. And if we're closer to the upper edge, I'm looking at that saying we're probably going to go there first. But we're really barely down at all, slightly closer to the lower edge than we are the upper edge. And we were a lot closer to it earlier today, and we've came back from that. This looks a lot closer to bounce on an S1, rally into an R2 kind of scenario than yesterday when we broke the S1 and went all the way to the S2. And the best we were able to do from that is just rally back up into the pivot point. So this is the sort of setup we would want to see for an S1 bounce into an R2 run. And if we get that close to an ADR, we're probably just going to go ahead and go to the ADR. That would also give us an inside day breakout. And so we can mark these levels, all of yesterday's range, and project that to the upside, giving us those levels too. Oh, and somebody asked a question yesterday, and I tried to answer them, but always it's better to, typing it versus showing it. So let me do it again, and they'll be able to see it. We'll answer their question here. So it was on this chart yesterday morning when we came in. My drawings from the day before were still there. So it was actually Tuesday. In the Tuesday morning briefing, I had snapped my lines from the Globex high to the Globex low. But I want to back this chart up just a little bit more because it was, of course, Tuesday morning in the morning briefing, right? It was around 8 o'clock in the morning. It was at this time. That's all the candles that we had. Every morning you can do this, right? So I like to use this quadrant tool down here. This says quadrant lines. Snap it to the highest point to the lowest point. That will throw all the lines to the upside. But what if I want lines to the downside? Then start at the bottom and bring it up to the top. Now I've got lines going in both directions. We can see there's lines up and there's lines down. So back it up to where it was at the time. We can see how you really can't read it. I don't like that. I like being able to read it. Just hold Control and click that line and it'll hide one of them. Now, I did that for the Globex range Tuesday morning, live in the morning briefing. And then Wednesday, when we came in and we were looking at, is there a point of control, whatever, my lines were there. And they were asking, where did these lines come from? And what was the starting point? And blah, 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 right? A bunch of questions about it. Well, now there you go. You can do that for all sorts of things. The 5-minute open range, the Globex range, yesterday's high and low, whatever you want. It works anywhere. It's just quadrant lines. So even for this morning, you can do the same thing. Again, that is our range. That's the Globex high to the Globex low. Throw it in both directions. And now we got our levels in both ways. And you can add to that yesterday's high, yesterday's low, the RTH high and low, which may or may not be different from Globex, right? You always have to check to make sure. And when the market opens and you get the first 5-minute candle, you can do the same thing to that candle as well. Everybody be careful, be safe, watch the clock, keep your eye on that 30-year.